Hello and welcome to this Kensington webinar. My name's Frances Taylor. I'm Head of National Accounts at Kensington and I'm joined by my boss, Craig McKinlay, our New Business Sales Director. Thanks again for joining us. You may have attended one of our past webinars over the last few weeks where we've been looking at the effect of COVID on the mortgage market, especially the specialist market, looking at kind of the green shoots that we've been seeing emerging. And this today really is to think about the future based on the market research that we've been doing with our brokers and our distributors. So I'll just set the scene and give a bit of an overview about what we'll talk about today. So I mentioned the customer research. So we'll be doing a summary of this research from our brokers and distributors. And just to mention at this point, this isn't necessarily Kensington's views. This is very much the data that we've got from the research that we have done. So we'll be looking at the impact and the future of the lending market, really around customers, brokers and lenders. We'll then look at the impact this will have on the future lending market, and Craig's going to do a bit of an update around Kensington and specifically what we're doing with the market research and the data that we've received from doing this. So I'll give a bit of background on what we've been trying to achieve and the process that we've been through. So really our objective around this was to understand since COVID and post-COVID how customers' needs are changing. We want to then build products around those customer needs, but we really want to get a gauge for how brokers want us to interact with them in the best way possible going forward. So we put this into 4 stages. The first stage was to conduct broker research calls. So we did over 100 questionnaires with a range of questions, and we did that from outbound calls and inbound calls. We then set up some virtual group sessions. Now we did this with an external company because we really didn't want to influence as a lender anything that was said within any of these sessions. So we set up the 2 sessions, and the first one was held with our distributors. So we wanted representatives to give a really broad view across the market. So we invited colleagues from clubs, from networks, from packages, and also from our new build partners to really get a sense of the new build market and how that would be affected. We then held our second session that were with brokers, and we ensured that these brokers ranged from anywhere from Scotland down to the south and covered lots of different mortgage specialisms, again to try and get a really broad view and perspective. So like I said, we're going to break down into these 3 sessions. So I'm going to hand over to Craig, who's going to talk about customer.
Thank you, Frances, and hello everybody. Thank you very much for joining us today. So on the screen, what you'll see is a word cloud. This has been generated with some research done by our friends at Legal & General Mortgage Club, who are kind enough to share this with us. So on the left-hand side, this was a word cloud built from the words that respondents gave at the start of April. So the research company went out, spoke to a load of customers, and this is the words they got back, which is a summary of how they were feeling. So you can see the word that really stands out is anxious. So people are obviously worried, anxious, nervous there, a little bit bored, but mainly anxious, so people very kind of worried. But then the good news is, towards the end of May, what you can see is, although people are still anxious, that's still quite prominent, bored is much more prominent as well. So it's much more balanced. People are still anxious, but they are bored as well, which in some ways is a good thing. I'd rather be bored than anxious. But what's really good is you can actually see hopeful emerge in there. So people are starting to feel a bit better, which is great. So we'll now look at what customers are telling us in terms of the research summary. We did some of the key themes that came out. So customers are a bit confused, understandably. This is a totally new circumstances for all of us. And there's lots of confusion in terms of what people are reading in the media. So should I take a payment holiday? What is a payment holiday? Don't really understand it. And part of the respondents in our research, somebody said that, well, actually the customers they've spoken to, about a quarter on a payment holiday, but actually loads of them don't really know how it works. So people have just taken something they don't really understand. What was also good for all of us in this sector is that people are far more understanding to the disruption that they've seen in financial services and mortgages than they were in 2008, because they know this is a health crisis and not a financial crisis. And in whatever walk of life they work in, so whatever occupation, everyone's been disrupted in some way. So I think people are therefore much more understanding of our businesses being disrupted, our customer services being disrupted, and people having to work in a different way, sometimes being operationally challenged. And then furlough. So again, furlough is something completely new that people have had to get their head around. I think people are very much aware, especially now, some people are starting to come to the end of a furlough. The retailers are all open back now, all the shops are open, which is great news. So a lot of people are coming off furlough, but also sadly, we are seeing a lot of redundancies, and we've seen tens of thousands of redundancies in the last few weeks, which is really sad. So we're really just starting to understand the impact of furloughs for some people turning into redundancies. Payment holidays, again, something completely new. People just don't really understand it because they've never had to experience it before. Lots of confusion. And very clear guidelines that a payment holiday will not impact someone's credit score. But I think what is emerging is that underwriters and lenders will look at someone who's had a 3 or 6 month payment holiday and possibly base their lending decision as on part of that input. And we are seen people, and this was a quote from one of the brokers we spoke to, who said, you've got a customer who says, on one hand, I'm under financial duress, so I want a payment holiday, and then they may have another mortgage, especially if they're a buy-to-let portfolio landlords. They may say, I'm not paying this lender at the moment, but going back to the same lender and saying, can I have a £500,000 loan? And by the way, I've got quite a chunky deposit. Obviously, lenders don't feel great about that because they're kind of saying, well, you haven't got the money to pay your mortgage, one of your mortgages, but you've got a big deposit for another mortgage. So there's all those kind of things that people are working through. And then on social distancing and the way the industry works, customers really looking for us to show some leadership. So again, lots of confusion. Can I buy a house? Can I go and view a house? Can I go to a new build site? What happens if I do? What expectations should I have of other people? What expectations should I have of valuers? And do I want people coming around my house if I'm trying to sell it? Should I be wearing a mask if they do? Should I go and sit in the garden? So lots of questions and lots of concerns, and we're all kind of making this up as we go along. So often it's quite hard to get those answers, but I think people are really crying out for that. And then moving forward to really looking at the outlook for customers. So, the good thing is people are now starting to look forward. The first couple of slides were really people being in the moment and really trying to get to grips with this new reality. And the good thing is people are now starting to look to the future. And I think one of the things that comes out really prominently is just how important people's homes are now. I think it's very different when you spend 24/7 in your home versus when you're possibly out most of the week, and possibly a lot of the weekend you may not spend that much time at home. But when you're there 24/7, people are saying a garden's really important. They want more space indoors and outdoors. People are worrying about how close they live to local amenities like the high street and shops. Presumably that is because they're worried about getting public transport, and if they could walk, that would be better. But I think people are looking for different types of property now and possibly different locations than they had done previously. Then there's some personal concerns and people really understanding how vulnerable they are and how vulnerable their finances could be. So a real opportunity for protection here, because people are now really starting to think, well, what happens to my finances if I get furloughed? What does it mean if I take a payment holiday? I could be at risk of redundancy, or maybe getting cut hours, or my pay could be cut, or I could lose bonus or discretionary variable income. So very much, a concern about how do I protect myself from that and take some real responsibility for myself. And then I think overwhelmingly, we've seen it in across business, across consumers, borrowers, digital. There's a real expectation digital will be the new normal. So huge increase in people using Zoom. I hadn't even heard of Zoom until about 5 months ago. Netflix subscriptions going through the roof. Lots of changes in terms of how people work. And I think there's an expectation that will will not go back to normal. That although we may go back to the office and things will continue to go back a little bit to how they were, digital will be far more prominent. So I'll now hand you over to Francis to talk about the view that brokers gave us about themselves.
Brilliant, thank you very much, Craig. So I'm going to cover broker, and we're going to break this down into two separate parts. So the first part is the questionnaires that we did with brokers on the telephone, the inbound and outbound, and the second part is going to be the focus groups that we did, so combining that data. So from the questionnaires that we did, we wanted to really get an understanding of how brokers were adapting in this new world, in new environments because of COVID, and what changes that they thought the future would bring and how that they would evolve and interact going forward. Just to note, there was some free text within these questions, so we've included that in some of the answers as well. So I won't go through every single question, but I'll summarise each one of those. So the first couple of questions were around working in the office versus working from home. So what did you do before, and do you think that will change post-lockdown? So there's, within these questions, I'll note that there's a mixture of employed and self-employed, so kind of take that into consideration with the answers. But the bottom line is that more brokers will incorporate working from home into their weeks. However, the majority are still keen to return to the office. Tech's been, the main enabler for working from home, so that's really, really positive. And I think from a Kensington perspective, we're very much in line with this. We're keen to get back in, but it won't look the same again in the future. We'll have a mixture of working from home and working in the office as well. So the next questions were around customer appointments. So what did you do with your customers before? Did you see them face-to-face or telephone? And do you think that will change going forward? So broker preference pre the crisis has always been face-to-face, albeit it's a 60-40 split for telephone and face-to-face with, I think it's 1% there being virtual. Going forward, over half of customers will probably want to interact differently. So that's going to affect what we will be doing, absolutely. So that could be a combination of customers just getting used to having more virtual appointments, but also I'd imagine social distancing would have an impact on that. The comment, the last bullet point there, brokers are happy to conduct virtual appointments, but you don't necessarily feel that it's a replacement. I think a lot of the time with customers, you could have 1, 2, 3 appointments anyway, so would one of them become virtual, one face-to-face, for example. So the next question was around events. So since lockdown, we've had lots of different events, seminars, conferences, roundtable, either being cancelled or postponed. Lots and lots of digital innovation. It's amazing some of the events that we've even attended and how they work. So we wanted to understand if brokers would still attend events in the future, or if they would prefer more virtual events. So almost 70% would still attend a physical event, but over half said that they would prefer to have something virtual. And part of the influence of this would be the location of the event and how long it was. So if something's closer to you, you're only out for a few hours rather than traveling across the country for, 2 days potentially, that would play a part in the decision. And that's really interesting for us at Kensington, and we'll be involved in the discussions that we have with our networks and our clubs about what we'll be doing going forward. So the next two questions were around BDM visits. So did you have physical visits before? Do you feel that they'll reduce? And would you be happy to have more virtual meetings with your BDM? So the key points here were physical BDM visits are more productive. But over 60% of brokers said that they would be happy with more virtual events. I guess the proviso being that those, if they are virtual, then they definitely have to be interactive. And we have to take into consideration if brokers aren't in the offices as much, then there's not someone for the BDM to go and visit. So that would have an effect on it as well. And then the last question was around technology. So which virtual application do you prefer? Now, bearing in mind, we only did this a few weeks ago, but the pace that technology is evolving is phenomenal. It's going really, really quickly. So this still stands, I'm not sure. I think everyone would have had their 40 minutes on Zoom where they've been kicked off. So that could change any influence going forward. But at the time of the question, Zoom being the clear leader in video conferencing. So I'll now move on to the group focus sessions. So we had the two sessions, we had brokers and we had distributors, but we've combined all of this data into one point. The difference to these sessions to the other research that we did was that we wanted to understand how COVID had affected brokers and customers, but really wanted us to understand what people thought customers would need from lenders in the future, and that's the key part there. So these sessions were over an hour and a half each. There was lots and lots of talking, great debate within there, and the sessions definitely helped everyone else on the call to get a better understanding, hence why we wanted such a broad perspective. But we managed to kind of get all of this information into four areas. So media being the first, and I think Craig mentioned earlier within the customer section, wasn't particularly helpful, some of the headlines. We've got an example here, the mortgage market's closed. It's quite scary for customers, creating a bit of a knee-jerk reaction and then looking to the broker for help. But that leads really well into the second point, which is communication. And the biggest part that was pulled from this was the importance of brokers staying in contact with their customers, even when they didn't necessarily have any business to do. So you weren't going through with that remortgage anymore, you were going to wait, the purchase had fallen through, so we're not doing it. But assurance and help and guidance from brokers was really, really important. I think probably the best example is payment holidays and the guidance that a broker needed through that process. Social media, it's been on the rise for many, many years now, but from a broker perspective, LinkedIn was a really, really great place to keep on top of what's going on in the market and definitely with lenders as well. I think 90% at the moment is in and out so much, it's a great place to look to, as well as networks and club hubs, etc., to find out what's going on. But also for customers and for a broker to interact with their customers, engage with customers, help sheets around COVID, etc., have been really, really helpful. The comment on here in green just about a post on Facebook around coronavirus being the most engaged post that they have ever had. So really, really good platform there. The next is around business models. So we did speak to everyone on this session. You could have been a broker that kind of works for yourself, or you could have been employing 700 brokers. So there's a really, really broad range here. So there's a comment about cash reserves having to fall back on. So that would differ very much from broker to broker. But operationally, fundamentally, we've all had to come out of a face-to-face advice environment into a virtual environment, and that's brought in lots of different issues around efficiency, ID&V, security. So getting help from your network, from your club, from your employer has been really, really important. But if you don't have access to that, that's something that is really needed within the market. The last is proposition. There's a really nice quote here that we included, and I think we can all say we've never been through this situation before. We hopefully will never go through it again, but it has fundamentally changed the way that we will work, and it's changed what customers need. So in order to meet those expectations in the future, we have to broaden our proposition. That may be looking into different customer segments, or just going into a different area if you never did limited company before, or later life, for example. So that's broker in a nutshell. I'm now going to hand over to Craig, who is going to talk about lender.
Great, thank you, Francis. So this is now a summary of what brokers, so the 100 brokers we spoke to in the focus groups, really, what's their ask of lenders, what do they want lenders to do to help them through this difficult period and beyond. So I think very much positive messaging. So there has been a lot of negative messaging from a lender point of view. There's lots of messaging about, restricted loan to values, some people exiting the market, stopping lending temporarily. There's been lots of challenges, there's been lots of talk about payment holidays. So I think a real keenness for people to talk in a much more positive way about the market's open for business. Yes, you can buy a house. Yes, you can get a mortgage, etc., etc. So I think that's what we need to focus on, is getting some good news stories out there. And from looking at customer segments, brokers feel lenders need to look at different segments, emerging segments, things that have changed. So a request there to recognise the heroes. Happy to say at Kensington we do have a heroes product, which gives enhanced lending to key workers. Very much seen that professional landlords will be out there bargain hunting and looking to get a good deal, so they'll still be active throughout in the purchase market. Equity release could be quite big as people want to free up some cash. Getting a deposit, I think first-time buyers, there's definitely a view first-time buyers could struggle through this. So first-time buyers will typically, I think it's going to have been harder to get a deposit over the last couple of months because people will have had potentially less income if they've been furloughed. They may have lost variable income like commission, bonuses, overtime, etc. So building that deposit gets harder. And then obviously there's far less high loan to value propositions out there at the moment, which is definitely a concern for first-time buyers, and also a concern for self-employed and how they're affected. They'll have presumably had a difficult few months, depending on which sector you work in, and have lots of variable income. From a product perspective, so I think there's a real call for innovation. So this is new circumstances, so we need some new products to fit into those circumstances. So really trying to understand what's the customer need post-COVID, how have customers' circumstances changed, and making sure we've got products that align to that. And then really, I think the whole point I mentioned there about a real demand for high LTVs, but a real lack of supply from lenders in high LTV products could mean that things like Help to Buy become much more important because they rely on a smaller deposit, and things like shared ownership, shared equity could be a good solution for those first-time buyers or those who have got a smaller deposit who are struggling to buy a property. And then finally, brokers want lenders to be much more flexible. There has been a completely new set of circumstances, so we need to respond to that sensibly and flexibly, and come up with the right kind of policies for people who've had temporary hardships. So, you know, if you've been furloughed or been on payment holidays, making sure those people don't get penalised once they get back to normal and can continue to borrow, and that we support them in the industry. And then, you know, great for Kensington and the rest of us in the specialist market. There's a feeling that specialist lenders is going to be important post-COVID, because typically not doing a credit score, manually underwriting, you would think those lenders, which tend to be specialist lenders, will be able to take a much more in-depth view of someone's circumstances and really get to grips and understand their circumstances. And if they've had a temporary blip, is it temporary? And have they got back on their feet? That would typically become something you'd expect specialist lenders to do. So we'll now look at Kensington's response. So in terms of what we're going to do, so we've been very grateful to get all this great research and input from brokers. We had some really good questions before the webinar as well. So we've tried to make sure we incorporate those and come up with those answers. So in terms of what Kensington are doing, how are we going to respond to this research? Well, we've spent the lockdown period accelerating our technological transformation. So we have a new broker portal going live in July. So we'll be putting that initially on pilot in July, and we're looking to roll out by the end of July. So that will give us a new broker portal. Benefits for brokers with that is it will be a simpler portal, and it will have some really good underwriting capabilities, and it will have much better broker communication. So it will be much easier to see where your case is, what the updates are, what the underwriter needs from you, where we are with the case, etc. We're also looking at much more communication methods to talk to brokers, so looking at new communication channels. So with our BDU, we're looking at flexible opening. We want to open up longer. We want to look at things like weekend opening. We want to look at things like live chats, which means we can talk to more people at the same time. We want to look at things like broker SMSs, intelligent IVRs, where you ask the IVR a question and it gives it to you using some of the robo chat technology that we've already got live on our website. So really trying to move away from the very kind of old-fashioned phone up, talk to a BDU guy to get an answer, much more trying to interact with brokers the way they want to interact, which would be over a range of different media. And then we've really been investing in servicing. So, huge pressure for all lenders on servicing with payment holidays. This is something we've never had to deal with before. We've had times where the call centres had 700% of the normal call volumes with people trying to set up payment holidays. Now, payment holidays are starting to roll off. So a lot of the people who had 3-month payment holidays are now starting to roll off. That will then give us another massive spike in call volumes. So what we're trying to do is we've invested in technology to try and solve that. So rather than everyone has to phone up and wait in a massive queue, or we just have an online form which just gives everyone the same answer, we've got a new piece of technology which takes the customer's circumstances. The customers fills in their circumstances. They say if they're still on furlough or not, if they need the payment holiday, what their financial circumstances are, and then the system recommends the next best step for that customer, which could be capitalise the payment holiday, go back to your normal payment. It could be interest only. It could be going through the arrears process. But we want to give customers an individual answer to their individual circumstances rather than a one-size-fits-all. But we need to do it in a way that we can mass automate that, which is what we've done. So that's really good. And then from a product point of view, so looking at those COVID needs, how's the world changed? It's very important that we make sure we've got a proposition that aligns to those new needs. So we're looking at new products that take into account if you've been furloughed, if you've been on a payment holiday, etc. How do we treat that? We have got a securitization which will free up some cash for us so we can do more lending and hopefully increase our product range. So that securitization should go live this week. So we've got the securitization. We will have, we'll be looking to increase our loan to values. Last week we did increase our product range. We went back to 80 loan to value on residential. We went back into new build and we went back into buy to let purchase, but clearly we're looking to do more over the coming weeks, and securitization is a really key thing for us to do that. Then from a policy perspective, we have updated our policy so that we can take furlough income. So we'll take the basic furlough income from the government. If the borrower is in receipt of a top up from their employer, we'll also accept that. We haven't changed any of our underwriting, so we'll still do 1 year self-employed. We'll still take 100% of variable income if it's sustainable. So we haven't changed any of our policies. We haven't tightened criteria. The only thing we have done is reduced our loan to values, and we have temporarily increased financial resilience checks, which typically means for a new borrower, we want to see that they've got a little bit of saving there so that if they do have any issues, they've got 2 or 3 months worth of mortgage payments they could make. But otherwise, we haven't changed criteria. And then from a sales point of view, we've been doing lots of webinars to try and communicate with brokers. We've done the research because we think it's really important to understand what's going on with brokers and customers. We'll be looking to do more Kensington hosted events. We'll still absolutely do face-to-face when brokers wanted to do, when we can go back to face-to-face, when we're comfortable and brokers are comfortable to do that. And we've got lots of events in the calendar, as Francis said earlier. Some of those initially will be virtual events, but as and when we can, we'll be going back to a full host of events. But we're very keen that we try and communicate through this crisis and onwards so that everybody knows where we are. I'll now hand you back to Francis.
Brilliant. Thank you very much, Craig. And just a thank you to everyone for joining us today. Really, really appreciate any feedback that you may have. It does make a difference to what we do our webinars about in the future. So if you have any feedback, please let us know. Any more questions or anything you have, feel free to contact ourselves, your local BDM, or of course myself. We did have this pre-recorded, so you'll have a CPD certificate available to download after this. Thank you very much once again.